Welcome everybody to the Revenue Roundtable. I think most of us know each other, but let's go ahead and introduce yourselves in the chat so we can know who everybody is in case there are folks who are new to each other. I'm Rachel Flum. I'm the Strategy Director with the Economic Progress Institute. And most of the call today will be Alan Krinsky, our Senior Fiscal Policy Analyst, who will be walking through a number of hot topics on budget and legislation right now. We're hoping people can stay on over an hour, but if not, we completely understand. But we would love to have some open discussion, after the presentation. So we expect the presentation to be about 45 minutes. Alan will stop in between each section and see if there are any sort of technical questions. And then we ask that everybody sort of save all their hot burning discussion topics for the end. So I think that was all again, if you just joined, please introduce yourself in the chat. And we are going to be recording, but we'll only record Alan's presentation so that we can share it for folks who weren't able to join now. We won't record the discussion part so that people can be candid. All right, with that, I'll turn it over to you, Alan.
Okay. Everyone see the opening slide of the presentation? Good. Okay, so welcome everyone. Today we're planning to discuss four topics. The budget, the fiscal 22 budget, revenue, federal relief funds, and cannabis legalization. So let's jump right into it. So when we last convened the Revenue Roundtable in January, we discussed estimates for the fiscal 22 budget gap. What we knew, what seemed likely, what we didn't know. So it's about 4 months later now, and that means 4 months more of things we know and things of which we're newly uncertain. So we have more info about actual revenue collections for fiscal 21, the current fiscal year, and we have just concluded the semi-annual caseload and revenue estimating conferences with revised estimates for 22. We've also received the good news about the additional federal relief from the American Rescue Plan Act with spending guidance issued just last week. So in March, the estimated budget gap for fiscal 22 was around $330 million. This image here is from the presentation by Sharon Reynolds Ferland and our House Fiscal Advisory staff, the House Finance Committee on March 25th. The Office of Management Budget presented 2 weeks prior to that and used a figure of $336 million. These numbers were about $100 million lower than estimated in December when the fiscal 21 budget was enacted. Now, I want to introduce the concept of CSL current service level in terms of how we figure out what the gap is. Because, when we have an existing budget, the prior year or the current year, we know how much is being spent or supposed to be spent, and we know the revenues. So we can estimate a deficit based on that difference. But for the fiscal 22 budget, we don't know what the expenditures are. So how do we get at a budget gap? How do they get at this $330 million? So what they do is they take the current service level, what services are being provided by the budget, I guess in this case, the 21 budget, and then they see what it would take to have basically a level budget, not level in money, but level in services. And then they look at what are the estimated revenues and what's the difference. And that's how they get at something like the $330 million. And since March, since this estimate, we've had additional information, including, again, the recent conferences, caseload and revenue estimating. For anyone who's not familiar with that, twice a year, November and May, representatives of the Senate Fiscal Office, the House Fiscal Office, and the administration through the Office of Management and Budget get together to hear different kinds of testimony, gather information, and then agree among themselves on what certain expenditures will be and what the expected revenues will be for the current and the next year. And this helps set expectations and also says how much there is available to spend in the budget that's being developed. So first we'll look at some of those caseload numbers that deal with the services, people being served and services provided. Because the budget gap is affected by these as well as by revenue. So first we have Rhode Island Works here, Rhode Island's cash assistance program. And you'll see from here that the estimated number of beneficiaries is gone down in terms of the estimates May compared to November. The other benefits category in here includes such things as clothing for children, monthly bus passes, supportive services. But what I really want to point out is you notice the last two rows, total Rhode Island Works expenditures and federal funds are exactly the same. And that's because we do not use, and I guess sometimes have not used any state general revenue monies to pay for the Rhode Island Works program. It comes completely from the federal TANF block grant of $96 million. And the benefit that people receive has been unchanged for 30 years. Senator Murray's bill would increase the benefit, and the increase would also be covered by the TANF block grant. The estimated cost for this is $9 million, would be for a whole year. For fiscal 22, it would be beginning in October, so about $6.75 million. For childcare, you note here that the census is down. The estimate of how many children being served by the program is down by 1,100, and yet the cost per slot is up by $1,300. So the explanation for this in part is that there's no copay right now. And even when the copay is reintroduced in January of 22, it'll be at 7% instead of the current cap of 14%. Plus there's been increased payment to providers. That explains that sort of difference. This just shows the total cash expenses, includes the two slides we just saw, plus SSI and GPA programs. So overall, relatively similar in May compared to what the conferees thought in November. And then the biggest piece, of course, is Medicaid. I think this is the first time that the state funds will be above $1 billion. But the state contribution is actually down slightly from the expectations in November, despite the fact that overall spending is up by almost $200 million, or I guess overall the expenses that will be required for the Medicaid program in fiscal 22. I want to note that one of the conditions of the federal aid, and this includes the increased federal match for Medicaid spending, is that we don't terminate anyone from Medicaid benefits. That rule will remain in place until the feds declare an end to the public health emergency. And at that point, there'll be some sort of process for redetermining eligibility. Okay, so now let's turn to revenue. I just mentioned the FMAP, this federal matching contribution for Medicaid spending. That back in November, we knew that the match was enhanced through the third quarter of fiscal 21. Since then, learned that it goes throughout this fiscal year and actually through the end of the calendar year. So the first half of fiscal 22, and so that accounts for about an extra $84 million in revenue. The hospital licensing fee, which I think is not formally reinstated for fiscal 22, so is not accounted for in the estimates, will be another $178 million to help. These are sort of changes in our revenue estimates since November and ways to help close that budget gap. We'll talk in a few more minutes about the Paycheck Protection Program, but they are, in November, the Revenue Estimating Conference did not assumed that these monies were coming in. In May, they're assuming they're not coming in, but I'll explain that in a few minutes. But there's a potential, there's certainly a revenue loss, potential revenue protection. The rainy day RICAP fund, you'll recall that at the end of last fiscal year in 20, the General Assembly decided to take out $120 million from the rainy day fund to help balance the budget. By statute, the General Assembly is supposed to repay that money in the following fiscal year, though in this sort of odd kind of thing, which may be unique to Rhode Island, we don't pay the money back into the rainy day fund, we pay it back to the capital plan fund, RICAP, because that fund is what usually benefits when the rainy day fund is at its maximum, the extra monies flow there. So every year, 3% of revenue, general revenue is set aside for the rainy day fund. So this repayment is supposed to go of the 120 million to RICAP. The original budget in December for fiscal 21 proposed paying 90 million this year and 30 next year. The governor's proposed supplemental budget wants to restructure that and hold 70 million of that off until fiscal 23. There have been a few other things, including different rules about FEMA emergency funding and state contribution. So that looks also to be saving more than $100 million in revenue. The big thing, or I guess the big news you may have heard from the revenue estimating conference that came out, are the new estimates on revenue. For fiscal 21, that means $177 million more than was expected in November. For those of you who were on the January revenue roundtable, there was that initial optimism that there was $58 million collected through December. Some anxiety that that amount could be reversed or might be a blip. But every month, with each month, Department of Revenue comes out with updates on actual collections. That's gone up. It's up to 220 million above expectations. So I guess they're expecting some modification of that, but still 177 million extra in fiscal 21, which should then become surplus that could go into fiscal 22 and closing that budget gap. And then there's almost $150 million they're expecting compared to what they thought in November for revenue collections next year. So these two items together right here themselves basically close that that $330 million budget gap, not including the other items we talked about in the previous slide. So and continued sort of replacement of eligible expenses by federal aid. So basically, I'm not going to give you a whole list of an itemized list and add up the total for expected revenues and the size of the budget gap or surplus, just to point out that it's clear that there are enough resources to close the fiscal 22 budget gap and thereby avoid any cuts to services or to the state workforce, which is, of course, good news. So good news for this year. The situation looking forward, not quite as rosy. This chart here is from the governor's, the executive summary of the governor's proposed budget, and it looks at the out years. And they're looking at budget gaps well above 300 million for each of the following 4 fiscal years. And so this means that we need to be concerned with preserving and raising revenue, despite the current good news, because a lot of the money coming in now, and we'll talk about soon, the federal aid, is one-time aid. It's meant to be one-time help with the relief with recovery or facing immediate problems. So we still need to think about revenue, protecting it, possibly raising new revenue for the following fiscal years. And just to, we've talked about the card tax phase out before, just to remind people that fiscal 22 will be year 5 out of 6 of the phase out. But even after the phase out is complete, the state is still on the hook to make the local governments whole for the revenue they've lost through the phase out. And that's about $250 million a year indefinitely. So that's a huge piece, or can be seen as a huge piece of that over $300 million budget gap for the following years. Seems unlikely the phase out is going to be slowed, let alone halted at this point. There's been some discussion about how to deal with that in the long term, but it's something we need to consider. Let me pause before we get into some of those ways to protect and raise revenue. Any sort of technical questions or something that was not clear?
So Arnie, you can just jump in, unmute yourself and jump in. All right.
Okay, then let me go ahead and talk about a couple of options that we can deal with now in the current session for protecting and raising revenue. So first is to raise the income tax by creating a new bracket for the top 1%. This is through a bill sponsored by Senator Murray and Rep. Alzate. And the important thing to note here is that you'll hear people say, well, we don't need to raise, we have enough revenue now because of what we see in those earlier slides, the federal aid. So now's not the time to raise income taxes anywhere. And the problem with this argument is that if this legislation is enacted, it will only take effect in tax year 22, which means people will only be paying any kind of, in the top 1%, paying increased taxes about 2 years from now in, April of 2023, when they're paying their 2022 taxes, and then years after that. So now actually is the time, worried about possible future gaps, to enact something like this. If we wait 2 years until the 2023 legislative session to deal with it, the additional income won't, or additional revenue won't come in until 2025. That'll be sort of too late to deal with gaps in 24 and 23. So now is actually a really good time to enact a proposal like this. This just shows you quickly the new bracket at 8.99% is still a little bit lower than the highest bracket 10 years ago when we last restructured the income tax. And it'll only apply on income above $475,000, meaning even if you are in the top 1%, the first $475,000 will be taxed at the same rates they are today. It's only on income above that. I just want to address quickly about small businesses, because that's been a lot of the claims against this proposal, is that it'll hurt most small businesses and business owners, and particularly people when talking about pass-through income. So just quickly, pass-through income is when, for S corporations, limited liability companies and such, business profits get passed through to someone's personal taxes, and they pay tax that way. And the fact is that the vast majority of small businesses will not be affected by this. I mean, it's simply mathematically impossible. There are about 5,000 taxpayers in the top 1%, and there's something on the order of 100,000 small businesses in Rhode Island when we include sole proprietorships. And so it just simply can't be that a vast minority, even a large minority of those businesses and business owners can be in the top 1%. And even then, taking the pass-through income, more than 90% of filers with pass-through income from S corps and LLCs are not in the top 1%. Under 2% of those with sole proprietorships, professional income, are in the top 1%. Many people in the top 1% have other income besides this business income. It's not just the business income. They have a spouse, say, with professional income. And also, some have said that this kind of proposal will prevent business owners from reinvesting in their companies. But if business owners take profits and turn them around and reinvest in the same year, they realize the profits, that those profits are not taxable. So this proposal is not something that's going to hurt small businesses, and tax policy simply isn't what motivates most business decisions. And finally, on this, the proposal promotes tax equity. We know when we look at all state and local taxes, including income, property, sales taxes, that the top 1% pay a smaller percentage of income, about 8% compared with the bottom 20%, who pay more than 14%. This would bring the top 1% more in line with the next 39%. So a step towards some more equity. Okay, Paycheck Protection Program. This is something I feel very, as some people know, I feel very passionate about. This, I think it's widely misunderstood. Despite what you may have heard, small businesses are not being taxed on their PP loans. That's not happening under any proposal. So briefly, the PPP program works that the federal government made loans to businesses, or continues to help them stay afloat by paying workers and other business expenses. And that program has helped a lot of people. And that sort of was like a pass-through kind of thing. The money went to the owners, they paid for things, it just went through. Now, Congress put in a bizarre tax rule at the end of last year. Because usually if you have a forgiven loan for whatever it is, any kind of loan, and then the loan is forgiven, it counts as income. That's how tax policy has historically worked. So Congress said, well, you don't need to declare as income the forgiven loans. But that wasn't the really bizarre part. The really bizarre part is that Congress then went and said, however, you can still count as expenses what you paid for with that forgiven loan money. So I like to compare this to, imagine someone had major surgery that was covered 100% by insurance, right? Nothing out of pocket. And then you were allowed to deduct medical expenses for that surgery. That's a bizarre thing. We don't do it. We would not do it. And yet that seems to be the same kind of thing we're doing now with the PPP loans, is allowing people, it's not taxing them on income, it's allowing them to deduct for expenses they didn't pay for with their own money. And as the governor and others have pointed out, if you did not take a PPP loan and you dug into your own pockets to help pay expenses, you don't benefit from this extra deduction on your taxes. It only applies for the PPP loans. So there's a certain kind of unfairness there. So different states do this differently. Rhode Island is by law statute, what's called conform to the federal tax rules. Whenever there's a federal tax rule, we generally follow that rule unless we do something active to do differently, which we call decoupling. And so right now the question is, are we going to decouple in any way from this federal rule? If we do nothing, we will remain coupled. What are the consequences of that? The consequences are almost $129 million in foregone revenue if we do nothing and remain coupled to the feds. The governor has proposed what's called a partial decoupling, that his budget would allow deduction of expenses for the first $150,000 of these forgiven loans. This would preserve, if accepted, would preserve $67 million in revenue, so not the full 129. It would still result in a loss of $61.5 million in revenue that ordinarily would be due according to normal tax policy kinds of rules. So again, this is not a matter of raising taxes, it's a matter of preventing revenue loss and preserving revenue. And so this matter is still up for, I guess, consideration and decision at the General Assembly. Okay, let me pause quickly one more time, or not quickly, let me pause one more time. Any questions about these two options for raising and preserving revenue? Okay, then let's go right ahead into the federal relief from the American Rescue Plan. So first, this just is to review relief to date. These are from things that happened in calendar year 2020, including, you'll recall, the CARES Act, which resulted in about $1.25 billion in aid to Rhode Island. There's FEMA and other funds on there, but a total of almost $2.4 billion in aid to Rhode Island from last year. And the American Rescue Plan passed this year would basically double that, would or I guess match that, and result in about $2.5 million more in federal aid. You've probably heard the number 1.78 billion. That comes from these second two items here, the 1.2 billion for the state and 542 million for cities and towns. In addition to that money from Treasury, there's $772 million in targeted aid. And the next two slides show some examples of where those funds are directed and where they come from. They come from different federal agencies. The largest single part of this money is from the Department of Education, goes to elementary and secondary, as well as higher education, close to 600 million of that 772. But other money for other programs as well. Another sizable chunk goes for childcare and for the LIHEAP, the Low-Income Home Energy Assistance Program. So getting back to the $1.78 billion that's split again with the state and localities, the Treasury just issued guidance last week. And these are sort of some of the main points from the guidance about what the money can and can't, well, what money can be used for in this case. In addition to, there can be used to replace lost public sector revenue in the form of, they have a whole formula. You look at what revenue would have been without coronavirus, what actual revenues are, and that difference you could use to replace lost revenue if necessary. There's instructions about paying extra premium pay for essential workers, public health expenditures, and addressing the negative economic impacts. If people are interested, we don't have time to go into too much detail. I wanted to highlight one or 2 points here, is that there is an actual, I guess, encouragement to use the money to help reduce disparities, whether that's in education or economic disparities, with some suggestions on the kinds of things these funds can be used for and the kinds of populations they can be targeted to, including things about housing affordability, education, childhood environments, and other economic and small business kind of assistance. If anyone's interested in more details about this, the whole program and the advisory from the feds, I'd be happy to share that at some point. You could contact us. Now, there are also things that the money cannot be used for, and those include things like using money to help pay into pension funds, the rainy day fund, servicing debt, legal settlements, or to offset tax cuts that were enacted since March. And just one other thing to mention is that for states where the unemployment rate is more than 2 percentage points above what it was in February of 2020, all the money comes in one payment. As long as the state certifies they'll follow the rules. And other states will get in 2 payments. Rhode Island appears to fall into that first group. So we'll get that all at once. Okay, then last here, there are different efforts to figure out how to spend this money. Some money can be used for immediate needs, and some money for one-time aid. We can't use the money, or I shouldn't use the money to create new ongoing budget commitments. But there is a big pool of money here, and so there's interest in figuring out how to spend that money. The governor has his 2030 conversations, a series of Facebook conversations on different issues. Rhode Island Foundation has a project to solicit input on how to spend the money. We at EPI, along with RIPEC, are staffing that effort. And so there's an email address here if anyone's interested in submitting ideas or identifying priorities for how to spend those one-time relief funds. And I'll just conclude that it's important to use these funds to invest in the state or invest in the people in the state, but to do things that will help us, because we can't use the funds to solve those ongoing revenue challenges in the years ahead. So the things we can do now to help solidify and build upon the recovery would be helpful. Okay, any questions there before moving on to our last topic? Okay, so everyone holding questions and discussion for the end. So, so last time in January, we discussed cannabis legalization briefly. There's been interest in this. It seemed like this was a good possibility. This would pass in Rhode Island this year. A couple months ago, it seemed very likely, a little less so today, with the speaker recently suggesting that he's not necessarily in a rush. Right now, we have two proposals on the table, the governor's proposal in his budget and the Senate proposal. We expect a third proposal to come from Representative Slater out of the House, but we don't have any details on what will be in that proposal yet. EPI hasn't taken a position on legalization, yes or no, but I suppose you could say that our position is that if cannabis is legalized, then we should do it right. And that means including strong provisions for equity. Before we get to the equity questions, just a little bit of background and context. Rhode Island legalized medical cannabis a decade and a half ago and decriminalized possession of small amounts not quite 10 years ago. It's legal for adult recreational use in Mass and likely to pass this year in Connecticut. Across the country, it's legal in 18 states, including 3 that have passed it just this year, including New York. And we know that over the last few years, social attitudes have been shifting. So where the state, with this sort of national, I guess, context and movement, so where the state is, when there is movement on the federal level, and there could be legalization or getting rid of cannabis as a class 1 a drug. So where Rhode Island is when that happens could have an effect, whether our market is a little more mature, hasn't started yet. What the impact of interstate commerce is going to be is a big question. So even though legalization is not certain in Rhode Island right now, this national movement is inevitable. In terms of revenue, the revenue estimates, the governor estimates about, in his budget, almost 17 million in revenue for 2023, the first full year of legalization under his proposal. The first year revenue is very low, in part because of startup costs. His proposal in the years following that all range between about 11 and 12 million in tax revenue, so somewhere between 10 and 20 million when you add on licensing fees and such. The Senate has no proposal, has no estimate that I'm aware of, but the sales tax approach is similar. Both propose putting a 10% tax on top of the regular 7% sales tax. Senate plan adds 3% for a local tax. The governor's plan includes a separate tax on the cultivation of cannabis. Okay, and then there's not only a question of what the revenue comes in, but possible, I guess, lost revenue, foregone revenue, because we certainly know Rhode Islanders are crossing the border to Massachusetts, could be soon Connecticut, to purchase these products. So as long as Rhode Island stays out of that legal market, then for adult recreational use, then one might look at that as revenue lost to Rhode Island, to Rhode Island businesses. Quickly, for those interested, there are 3 ways of taxing cannabis. The most common way is by sales price, and that's what you see basically in the proposals on the table now. Tax based on the price consumers pay. But there are alternatives, including taxing by weight of the products, which is sort of like we do for excise taxes for things like gasoline or cigarettes. The tax per pack of cigarettes or gallon of gasoline is the same regardless of the cost the consumer pays on the pack or the gallon. Another method that's not widely used yet, but New York is going to do something with this, is to tax potency. The advantage here is that as long as you have reliable lab analysis, you could have a single excise tax based on the milligrams of the active component, whereas with taxing by weight, you have different kinds of products requiring different rates. But both weight and potency have an advantage over taxing by sales price because the cost is likely to drop over time and usage is likely to level off. So that's likely to result in a decrease in revenue over time, whereas by weight and potency, the taxes will be more consistent over time. even if the price changes on the product itself. Okay, so let's get into the equity questions and the history of this. So cannabis has been illegal, for a century or so, but a lot of that was driven by racism and xenophobia. A lot of, you see some of the propaganda materials from the 1920s and 30s and such, a lot of characterizing cannabis as something that caused particularly Black and Latinx people communities to become, make people violent or go crazy. And so there's a long history of this, also a history in terms of the arrests and convictions, disproportionate despite what's generally understood as similar levels of usage across groups, that the levels of arrests and convictions and imprisonment have not been equal. And even in Rhode Island, after the decriminalization of small amounts, citations have been issued for possession of small amounts, and the limited evidence we have from a URI study indicates that where information was tracked on race and ethnicity, that it's been disproportionate citations issued to Black and Latinx Rhode Islanders. And one other point I want to mention here is that you may have noticed I've been using the term cannabis, and until now have not said marijuana, and that's because the very term marijuana was introduced to replace the more sort of technical term of cannabis as part of that effort to associate cannabis with particularly Mexican Americans a century or more ago. And so there are some who prefer to use the term cannabis and not that more loaded term. And I just want to point out here that part of the importance of dealing with addressing equity is that I think I know for me, having learned a lot more hearing people's stories recently, we don't necessarily, for those of us who haven't been directly affected by arrest or imprisonment for this, that it's not only the stigma, but the consequences can last for decades. People who were arrested, even maybe didn't have jail time 30 years ago, still can face consequences from the criminalization of cannabis. Those consequences can include legal fees and fines, loss of jobs, difficulty getting a job, difficulty getting loans, being evicted, losing custody of children, and more. So these the consequences are real for thousands of people of the criminalization of cannabis, and again disproportionately in terms of race and ethnicity. Okay, so there are basically four different concerns, equity concerns with legalization, and when I talk about inclusion and access here, these sort of first and third items, we're talking about both about people who've been directly harmed by the war on drugs and criminalization of cannabis, as well as family members or communities that have been disproportionately affected. So the first concern has to do with who are making the decisions on how the market is regulated. Right now, for medical cannabis in Rhode Island, it's under the Office of Cannabis Regulation in the Department of Business Regulation. And neither the governor's plan nor the Senate's plan specifically includes, whether for the regulatory agency or even advisory bodies, people who have specifically been harmed by cannabis criminalization. It doesn't exclude people on that basis, but doesn't necessarily include them where there are sort of itemized lists of people who should be included. So one option to increase racial equity would be to include such people, certainly on the advisory bodies, but even on the regulatory bodies as well that are making decisions about legalization. Second, critical is the expungement of criminal records. whether for jail time convictions or even just arrests, addressing what I was saying a few minutes ago about the consequences people carry with them, sometimes for decades. The governor's plan does not address this. The Senate's plan would allow individuals to request to have their records expunged and would waive fees for that. But in some places, there's been an effort and increasing call to have automatic expungement, that the state would be responsible for identifying these records, the criminal records, and to expunging them without requiring individuals to initiate that process. It could be that we could use some of the revenue from the licensing fees or the taxation to fund this effort for the state. And as long as expungement is not done, it's going to make it even harder for people who have suffered from criminalization of cannabis and the drug war to get access to this market, whether as employees working in the market or even as owners of businesses. And there's nothing in either proposal on the table that would clearly include such people in reserving licenses. The governor's plan would reserve 20% of new licenses, of seller licenses, for minority or women-owned businesses, though this again does not necessarily include people who have been directly harmed, or even people from communities that have been directly harmed, depending on how those get allocated. There, are efforts to, I guess, at least gestured at in the proposals to provide support, such as low-cost or interest-free loans to people who want to get involved in the market, but none of that is guaranteed. But one thing equity advocates are calling for is to make it so that people who've been harmed have access to the market. And it's very difficult for people who, say, serve jail time for selling, say, small amounts of cannabis, and yet there are other people who are now able to make considerable amount of money doing the exact same thing. Whoops. The last question is the uses of revenue. What will they be used for? Do they just get absorbed into the general fund? Do they get put back into communities that have been harmed by the war on drugs? And again, both plans on the table point towards that in terms of these advisory bodies and funds being set aside, though it's not clear what, if anything, is guaranteed to happen with the funds. And so I would just leave you with saying that we still have one bill that's to be introduced. There is still opportunity to influence the shape of this legislation should legalization happen this year in Rhode Island, to shape the legislation to make sure that there are more stronger equity provisions contained in it. And that's about it. So now